Hey everyone, and welcome to the PivotBoss Closing Report for February 11th, 2016. Here's a look at the daily time frame of the ES. We had a big time push down in overnight trading, obviously getting down to about 1802 half. Price bounced and rallied back toward 1830s, but really came back and tested the 1805, 1804 zone a few times throughout the session. Eventually, price closed at around the midpoint of the day. You can see the initial rejection that is starting to occur off the previous month's low and that key range low here. Also after testing our 1811. So we basically completed our idea that from this change of control right here off of the HVN at 1921, when price went offered through it and came back to test it and was being defended, that's the day right there where I mentioned look for price if it's going offered at value at 1921. Look for price to rotate back to 1811s. We got that today. So now we're holding off to see how this thing progresses from here. Because if bulls are able to defend this 1800, 1805, 1804 zone, the implication would be a return to 1921. If you're going to defend off a value down here, then let's bring this thing back up here, right? So that's the idea right now. We're trying to see and trying to look for those cues that are going to tell us that this thing can go up. So right now, that's the initial idea, is that any pullback should be defended right now. But the fact that price closed middle of the range here kind of tells me that we could have a little bit more defense in this zone the upcoming day. We could see price chop around this area, maybe even dip down into an LVN and see what happens. So I'm not convinced that this is the low just yet, but it could be the precursor to what develops into a nice bounce higher. So we'll see how that plays out. Obviously, 1846 has been our key level for some time. That was resistance, the highs of the day, when price sold off from that zone after the previous close. So that's still an area to watch. Any acceptance beyond 1846 opens the door to movement into 1921. If we take a look at the intraday time frame for the ES right now, again, as I mentioned earlier, today was a rather different type of day. Not as pretty as we'd seen before. We saw a lot of crazy overnight activity and then just a lot of choppy behavior overall. But we did see the main zone here between 1805, 1809. That zone right there was heavily defended throughout the day, and price eventually closed back at 1826. So right now you can really see the range that's developing here. On the top end, 1834, 1835, that's been resistance, so we have this new range that's developing here. So the idea, fade the edges of the range back in the opposite direction until we see expansion. Once we see expansion, that move could be significant. Okay, let's take a look at crude oil. Crude oil's been trading below its key range here, so we had this 27.56 key range. That's the previous month's low as well. We finally got the push down into that below that zone, and then right here, 2604, just above the 26 evens, is where we saw a major buy opportunity or reversal off that zone, and that led to a retracement back into 2715. There's still a close below 2756 here, but as I mentioned before, this thing could have a failed lower low idea here that could slingshot this thing back up. We just have to see price reclaim the 2756 level first. So right now, we'll continue to watch this. Typically speaking, a rotation back toward 2665, somewhere in that zone, could offer a short-term buying opportunity for a slingshot move higher, but we'll watch that as it continues to play out. Watch 2756, as any push beyond it and a defense at it could be the spark that we need to get us back to 33.43. I wanted to bring up Thinkorswim here and show a different view of crude oil right now. Basically, if you scroll this thing all the way out, the previous key range that I was using this contract data showed that the rejection up here led to a move across the range into here. Once price dropped below the range, you saw the defense here, and then price dropped into the 50% expansion level, and then today hitting the 100% expansion level perfectly on the dot. So again, that could be where buy programs come in to take profits, and that could lead to a squeeze back up for any late sellers to the trend. Okay, taking a look now at gold for a moment. What you'll see here, we had a massive squeeze to the upside. As a matter of fact, we got such a significant squeeze here that this is one of the biggest one-day showings that we've seen in crude oil since 2014. We'll check that out again with the ADR indicator in a moment, but this is just a significant move. We talked about how this thing could really rally into 1169s and then 1192s. And then we saw the reaccumulation here, which could have been distribution, but it was a reaccumulation phase, and they held it above 1180, which was our idea. If you can hold 1180, there's a shot to get the next upside squeeze target of 1224.90. Not only did we reach it, we surpassed it and rallied into the target beyond it, 1252.70, where some profit taking came in just a hair. But this thing has been unbelievable. After you see such a significant blow off top like that, you have to be careful, because if the upcoming day shows any move against it or some type of digestion day, that digestion day could see a move right back into 1200 very quickly. But overall, this has been a fantastic squeeze. If we take a look at Thinkorswim again, let's bring up gold for a moment. What I wanted to show is this is a one-day range right here. So the current one-day range was 67.6 points. This thing on average has been averaging right now 22, 23 points, a session here, and that's with this major bump. So that's significant right now. And if you scroll back in time, you can see we had a big day here. That was last July. You go back a little farther over here. This is December 1st, 2014. That's the last time we had a day this significant. So this was just a huge day. And you can see right here, this is the previous key range that we were working off of to begin the year. And this is what I mentioned before. Right here, we had such a tightly compressed range. It was trying to hold below the bottom of this key range. And when it got the squeeze to the upside, that's when I mentioned we could see a move all the way across the range into the top of that range. So a pullback to defend it was going to be our shot there to get long. And you can see how that transpired. So a big time move in gold, but we got to be careful now. Okay, let's return here to market delta, and let's take a look at the NQ now. The NQ in a daily time frame shows prices dropped below that the low a couple of sessions back, dropping back below 38.93.5. What I saw in overnight trading was the fact that prices held below 38.93.5 just momentarily and then squeezed back above that zone. That was enough to get me curious here, because every time price dips its toe below 38.93.5, you've seen buyers come in to defend at that zone. So being that that's the bottom of the key range here from August, if this is a true defense, we could be looking at a solid reversal all the way back toward 42.26 at the very least, with a shot to see a rotation all the way back to 45.58, the top of the key range. So this could be significant. What we want to do here is just be careful though, because we don't want to buy a falling knife. So you have to be diligent on retracements. If price pulls back into a zone, call it somewhere around 39.23s, that could be a short-term area to defend for an attempt higher. If that area fails to hold, we could see more price discovery and testing of those lower price levels. So keep that in mind. Any failure to hold above 38.93 though, any close beyond it, opens the door to downside price discovery into those lower targets. Looking at the NQ here in an intraday time frame, one thing I wanted to show was just the key range here. This key range was the overnight range, 38.62s to 39.72s. Price traded and chopped around that range for much of the day, mostly in the inner midpoint of that range, and then attempted to push above the high of that zone, but was rejected late in the day. But overall, what you saw was a rejection here, and this was a rejection. Here's 38.93.5. This price action traded below there in pre-market. They got trapped, and it never came back ever since. Instead, rotations were defended at higher levels. This right here is a swing absorption signature by OTF responsive market participants. So anytime something like this happens, reversals to this zone tend to be defended. And not only that, at times you start to see the higher support levels form as this thing goes up. So this could be looking at a major retracement here. But again, if this thing can't hold above 39.20 for the most part throughout most of the day, then we could be testing these lower price levels again. So these are the key blueprint levels to watch as we head into the upcoming session. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.